You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern Time once again for TWIFO, This Week in Futures Options, a program where we break down all of the action on the futures options side of the fence. Maybe we'll talk some energy, some metals, some rates, some equities, the vol, the OI, the skew, all that good stuff, and a whole bunch more. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-evolving Options Insider Radio Network. Glad to see so many of you have joined on with the latest evolution, Options Insider Plus, and indeed Options Insider Pro. You know where to go to learn more if you haven't already, theoptionsinsider.com. That /shop link will explain everything to you, what we're doing over there, /plus and /pro should also get you there. Of course, a lot of you checked out that pro Q&A session we had on Tuesday. That was really fun. Look forward to more of those out there on the pro side, and the plus folks can get access to all the cool live streams and a whole bunch more. I've said it before, I'll say it again. This really is just the beginning. It really is still very nascent, and we're excited about all the cool stuff to come. So check it out over there for yourselves, theoptionsinsider.com/shop. Get you to everything, and you could kick the tires and light the fires as we embark on this crazy new journey here, 14 plus years into the network. Why not mix it up? So that's what we're doing. All right. And joining us here on the show to help me mix things up in the futures options world. First, we're going on out to the FTSE Russell studios. Are they the southern or the northern studios? I suppose we'll find out, because I'm joined once again by my futures options compatriot, Mr. Sean Smith, the managing director of derivative licensing over there at FTSE Russell. Mr. Smith, welcome back to TWIFO, sir. Where are you beaming in from today?
Hey, Mark, it's great to be here today. I am back home in the Chicago Western Suburbs studio today. So it's good to be home. It was a great trip south, and it's just good to be back. I'm really looking forward to a great show today.
Back in the FTSE Russell studios proper, dare I say it, sir?
Correct. Proper.
The proper. Your British folks over there at LSEG will be happy about that. Proper. The proper. All right. And also joining us in the CME hot seat proper this week, we got our old friend, Mr. Todd Colvin, the Senior Vice President of Global Institutional Sales and Business Development. Say that 5 times fast. Over there at AMBROSINO Brothers. Todd, welcome back to the program, sir.
Well, hello, Mark. Thank you very much for having me on today. I'm excited for a good show today. And, there's a lot going on, a lot of things we didn't know maybe 2 weeks ago that have changed things up a bit here in the world of options. So looking forward to it. Changing
the game every week. That's why you have to tune into TWIFO every week. That's why we kick it off every week with our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, listeners, let's do it. Let's kick it off with the Movers and Shakers Report, where we break down all the hot action over there going up on CME this week. You need the pro tools to get this scan, but fortunately for you, the folks over there at CME usually tweet it out before the show every week. So if you follow CME, you could see this chart for yourself. And if you did see it, you'd see it's kind of evenly split. Yet again, another one of those weeks, a bit of a coin flip to the upside and to the downside. So, Todd, that means there's a lot to talk about in both directions. Where should we begin our journey this week, sir?
I'd like to start up there at the top. I think it's near the cattle. Looks very exciting for a lot of reasons, taking up a big chunk of that big mover section.
All right, to the light side, then it is Todd giving away the top of our list, but we'll forgive him. Number 5 here to the upside this week. Listeners, you can probably guess it's crude oil. Yeah, a lot of energy in our top 5 this week. Crude oil up nearly 3%, 2.86%. It was number 2 in the same direction last week, up nearly 7%. And coming into showtime, not quite at the 70 handle, but it was threatening it not too long ago, listeners, at about a 68 3/4 out there in all things WTI. Let's go back out a little bit farther. There we go. We didn't make it. 69.35 seems like 69 about a half is about where we topped out, unless I can go back a little bit farther. We'll keep an eye on that, listeners, as we keep on rolling here. Next up, number 4 to the light side. Oats up 3.02%. You thought maybe the ag rally was over? Oats back here this week to tell you not so much. Number 3, back to energy. It's nat gas up 3, almost 3.25%. Number 2, once again, back out to the ags. Soybean oil up 5.12%. So getting a little bit of a lift back out there. And number 1, as Todd pointed out for us here, is feeder cattle up 11, almost 11.25%. So a lot going on in the ag/livestock side of the fence as well. Let's go on out now to the dark side. Let's start. We'll actually go out to number 8 because everyone's always asking where Bitcoin is. Bitcoin falls right outside our bottom 5 this week, listeners. It's only off net about 1%, 0.9% actually, since our last show, which for Bitcoin is a rounding error. It can do that in about a minute. So not a huge week net movement-wise for Bitcoin. Gold is number 5, off about 1.6%. Number 4, not a name we see usually in our movers and shakers. The New Zealand dollar, off about 1.84%. Number 3, copper, off about 3.5%. Number 2, the euro dollars, off 4.25%. And number 1, with a bullet to the dark side, class 3 milk. If you're looking for an interesting inverse/uncorrelated asset class, you could do worse than looking at dairy. When we were talking about our cross-asset correlation a few weeks ago, dairy was an interesting bright spot. Everyone always talks about crypto and all these other things as a way to get some sort of inverse correlation in there. But dairy, surprising some folks out there. I might have to chat about that a little bit here as well. In terms of the vol movers and shakers last week, let's start on the dark side. Last week, the decliners was all Bitcoin all the time. It was all Bitcoin getting annihilated from a vol perspective. This week, Flip that to lumber, the other hot commodity out there in the space. Lumber vol getting annihilated this week. Our number one vol decliner this week, 30-day lumber contract off a whopping 16%. Number two, again, that's not underlying price movement. That's 16% of the vol coming in. So I get it. Percent of percent, it's confusing, but stay with me. Number two, lumber 60-day off 8.5%. And we got the euro pound number three, 90-day off about 3%, bringing up the rear there. Vol advancers, not as much movement there. The euro pound 30-day getting up about 4.5% there. Number two, the mini European 3.5% fuel oil barge 30-day contract. So that one 5 times fast as well. That was up 3.7%. And number three, the short-dated new crop corn contract, 30-day contract, up 3.25%. So a lot more vol in the red than there was on the green this week. But I think we got to kick things off because it is topping a lot of your folks' minds these days. We got to head on out to energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody. A lot of you have been asking us about what's going on out there in WTI and related products. So we're going to make our first stop on our journey here out there in energy land. You guys know where to go to see all this for yourselves. CMEgroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those should work. Both of those will get you to our report home for TWIFO. Then select your product category. In this case, go out to energy and then go to the drop down for crude oil. Click on WTI and you're off to the races. Todd, a lot has been happening in the world of energy and WTI and nat gas and everything else. It seems like not that long ago we were talking about threatening the 40 handle to the dark side in WTI. Now here we are threatening the 70 handle to the upside. So a lot of movement to the upside. What's been lighting up your tape over there at Ambrosino Brothers in the energy department, Todd?
Well, certainly oil is always on the front of everybody's radar. Clearly it's an indicator. It could be even what we call a canary in the coal mine as to where general more macro type commodities could follow. One of the things I've been watching though here is there's been a tremendous amount of call building and open interest. Typically we see the call selling when we see oil prices going way down, but now we're seeing oil prices go way up. So you could even look as high as the 80, 85, and 90 strikes. We're starting to see some pretty good interest there. That to me suggests that oil prices may have some more upside from here. Even though we've made big strides over the last several months, possibly we haven't been able to sate that demand component that we're expecting with the unraveling and an opening of all these new economies, whether it be in the States or across the pond in Europe. Demand could be kicking in here, and I think we're seeing that reflected in some of these call purchases.
Well, let's get into all the options action. We'll kick things off out here in WTI. Like we said, it was threatening the 70 handle right now at about 68 3/4, still up about 2 and almost 2.5 points just since the start of the week. That's about 3.7%. And let's see, lighting it up this week, the most active contract is the July contract. Has exactly 2 weeks to go, so it's right at our window. It did about 35.5%. If you're wondering how much paper going up in WTI, decently active, 406,000. It's actually a little bit light. Usually you see about 450 or so this time in showtime, but still a fair amount of paper, 406,000 contracts on the tape, 35.5% of that coming in that July contract. Let's see what that contract has. If you're wondering right now, the vol out there, 27.5. So that vol coming in about almost 3.5 points out there. So a little bit of vol coming in, still decently frothy, a little bit shy of the 30 handle. That gives you some frame of reference when we're talking about the vol of these different products. You hear people talking about Bitcoin threatening 100 out there and some other equities in the 60s and 70s. Gives you a sense of how much volatility that actually is when we're talking about a WTI, which is moving fairly aggressively, only at about 27.5. In terms of skew, last week the puts were 6.3% rich, the at the money. This week, almost 9%, 8.7%. This is kind of what we've been saying for a while. WTI has been shaping up skew-wise and vol-wise, kind of like an equity for a while now, where the puts are bid and the calls are offered. Let's see if that's also the case this week. Last week, the calls were 3.3% cheap. This week, the calls 7.3% cheap. So the calls getting whacked, the puts getting bid up as we rally. That's straight out of the equity playbook pretty much out there. So WTI, maybe as more folks are discovering it in the broad market, got a question about this a little bit later. Maybe we'll come back to this, or maybe just the sense of what the outlook is out there for the product. Either way, it does have some reminiscent shapes and vol and performance of some of the larger equities out here. Let's look and see what the most active contract was out here. I said we were threatening the 70 handle a few times this week, so no surprise that it was the 70 handle out here in July with 2 weeks to go. That was number one with the bullet out here this week, listeners. Nearly 17,000 contracts on the tape. Again, no action on Monday either. That's another reason why WTI is lighter. We were closed here, of course, for the Memorial Day holiday here in the U.S., so you add in a Monday, I'm sure you'd probably be well north of 450,000 contracts. So Tuesday, 7,000, Wednesday, 7,000 as well, and today about 3,000 on the tape. So pretty active week. Decent amount of that actually closing on the 70 strike, which is kind of interesting. So as we got a little bit closer to the strike, some folks taking off their 70s. Maybe they were short those calls. Maybe they were long them and they got excited and took them off while the getting was good. Either way, some closing paper on the 70 call strike here in July with a couple of weeks to go. Outside of that, let's see. We've got, looks like it's the 75 call. So some upside call action. Go figure this week. About 12,500 or so of those this week. The most active day was yesterday, about 7,000, 2,800 on Tuesday, about 2,600 today. And of that action, it's kind of back and forth. Slightly closing on Tuesday, slightly opening on Wednesday. So back and forth on the 75 strike. Again, as it looked like that strike might play more into the bearing this week. More opening paper as we got away from it, maybe a little bit more closing paper. So 70 and 75 calls, not exactly surprising. Let's see if we can find anything else out there that's a little bit more aberrant, a little bit stranger out there. You know, puts weren't out of the action this week either, listener. 65 puts doing almost 11,000 contracts this week. The big day actually today, 4,400 on the tape today, 2,500 yesterday, 3,700 on Monday, Tuesday and Wednesday, both opening. Today, obviously, we don't know. So some opening paper on a 65 put strike. Maybe some folks thinking we have a chance to retrace down there the bid that's living in the put wing for the puts out there these days. That probably could argue that there is some downside concern at the very least going on out there. And that's been the case for WTI, again, since back when we were threatening that 40 handle. If you want a little bit more optimistic paper, you think the par strike is more up your alley? Then go out to Dees of 2022. Someone trading about 4,000 of those. 2,000 yesterday, 2,000 again today. Slightly opening yesterday. I don't have today's paper. I'd be surprised if they came and took them off on yesterday. Let's see. Looks like an 85-90 par maybe going up. It's the numbers don't really line up though. But folks do like themselves some upside and funky upside in WTI, but this one is interesting. 4,000 though of the pars trading in Dees of 2022. I don't know, Todd, any other energy lighting up your tape? You guys pay attention to nat gas out there at all in Ambrosino, sir?
We do. It's unfortunately the weather just turned here in Chicago, so my nat gas radar isn't quite as sharp as it is, say, a week ago when we were in the 30-degree handle in our weather. Things change here pretty quick, but yes, I have been keeping an eye on nat gas.
And what's been lighting up your tape out there, and what are your clients coming to you out there in the nat gas sector for these days, sir?
As you know, nat gas tends to be very cyclical. We tend to see in the springtime things tend to calm down, and then obviously as we head into the middle to the end of the fall, we start to see a bit of a pickup given the fact that where's that pricing going to be when these north winds do hit us. So we've been watching more than we've been playing in the nat gas here this last couple of weeks, kind of waiting to see where the dust settles, given the fact that we've made the turn and in a few weeks we're going to hit summer.
Let's see if the options market has been watching rather than playing out here from a volume perspective. You got about 233,000 contracts on the tape. Again, we're shy one day this week, but nat gas is number 3 on our movers and shakers to the upside, up about 3.25% since our last show last week. Coming into showtime, we have nat gas just over the 3 handle, 3.05 out there. So it was well shy of that not too long ago. So a nice little run of late out here in nat gas land. In terms of the action, 62% of that roughly 233,000 contracts coming in that one July contract that's going out in about 22 days. So pretty much all the action very near term here in nat gas. Maybe an argument for a few more weeklies coming online out here in nat gas. People like a near dated contract here. The vol a little bit higher than what we're seeing in WTI. Nat gas vol at about 32.25. That's off about a point this week. So you're talking a few points difference vol wise between WTI and nat gas right now. Skew, let's see if it's the same deal. It is the same deal as WTI, but not to the same degree. The puts are bid, but they're only about 2.7% rich. They were 2.6% rich last week. And last week, the calls were 0.6 of a point cheap. This week, they've swung in the other direction, 0.6 of a point expensive. They're a little bit bid. So a little bit of a bid to the puts. Not a ton of action either way, really, on the calls side. So not quite to the same degree as what we're seeing out there in WTI, where it's very pronounced, the bid to the puts and the offer to the calls. In terms of the action this week, like I said, we're hanging around the 3 handle right now. So you might be forgiven for thinking it was 3 puts, 3 calls that were dominating the tape this week. But no, it was the 2 3/4 puts in July dominating the tape this week, doing 22, almost 23,000 contracts. The big day was yesterday, about 17,000 contracts on the tape, about 3,000 of that closing, so slightly closing. And then Tuesday, about 3,500. Today, only about 2,000. So yesterday was where all the paper went up. And right behind that was the 290 puts, doing about 22,000 as well. So it looks like on Wednesday, 12,000 of those traded. So maybe some verticals in the 290, 275 range, about 8,500 going up of the 290 puts on Tuesday, and about 1,300 today. So it seemed like there was a lot of put action out here this week, listeners. Then we get the 3 puts, number 3, with about 15,000 on the tape. The big day there was Monday, about 8,000 on Monday, 4,800 on Wednesday, and about 2,000 today. So pretty much all puts all the time, even though WTI has been rallying of late, and it rallied again this week, up about a little over 2%. Still a lot of put action out here. Let's look really quickly to see if we can find any other aberrant prints. Nat gas isn't quite like WTI, where we see some more longer term interesting stuff out here. It's mostly 3 calls when you get a little bit beyond Dees here. So not a ton of interesting stuff lighting it up, but still nat gas is moving and shaking. You know what else is moving and shaking out there these days? It's volatility. Now let's look at it through the lens of equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, let's get into it. Let's talk equities. When we're talking equities, we've got to kick things off, setting the table from a vol perspective. And we are seeing some evolution out there in the overall vol markets. Coming into today, we saw some red on the screen earlier in the sessions, and the market's fighting to get a little bit of green. Now we're back firmly in the red across most of the major indices out there today. So vol coming into showtime actually up a little bit since this time last week. RVX, a.k.a. the VIX of small caps, at about 25.5 when we kicked off the show. It's up about 2 points from where it was this time last week. VIX was threatening the 18 handle when we kicked off the show. It's up about exactly a point from where it was this time last week. VVIX is at about a 112. That's the vol of vol, listeners, up about 8 points. So vol getting a little bit frothier since our show last week. A vol Q, which is the at-the-money vol of the NASDAQ 100, also the newest tradable product on the vol landscape over there at CME. Can't really trade C-vol yet. Once we can, we'll add that to the list. That's at about a 1911. Interesting year, also interesting level. That's actually only up slightly from where it was this time last week. So that puts that VIX to RVX spread, a.k.a. the large cap to small cap vol spread, at about 7.5 points. Actually a little bit wider, about a point wider than what it was this time last week. That's probably because RVX has got a little bit more of a kick to it this week. And the VIX to vol Q, so the S&P to NASDAQ vol spread, at a little over a point, about 1.25 points. That's about 3/4 of a point tighter, actually. So I think that movement in vol Q is contributing to that. It's been kind of glued at the 22 level for quite some time. So coming off that now is interesting and contributing to that spread getting a little bit tighter. Sean, let's go out to the FTSE Russell studios first. What's lighting up your tape out there in small cap land? And it seems like you got some interesting stuff on the horizon, sir.
We do. Speaking of the horizon, we're in the middle of recon, as you know, which is the reconstitution of our Russell indexes. And this Friday is the preliminary add and deletions list of stocks for the Russell 1 and 2000 for the Russell indexes. So that's Friday, June 4th. And then the next 2 Fridays, the 11th and the 18th, we have additional additions and deletions. Monday, June 14th will be what's called lockdown. That period begins. And then that Friday, June 25th, is actual reconstitution. It's the final reconstitution after the close where We have record volumes in equities at our partner exchanges, NYSE and NASDAQ. And when the indexes open up again on Monday, June 28th, the newly reconstituted indexes will be available for our investors. So lots of stuff happening in the month of June. We're very excited about it. Back to volatility. I wasn't on the show last week when you had Derek Salmon on the show. And I'm really sorry I missed that.
He said all sorts of bad things about you, Sean. So good thing you weren't here.
I'm sure he did, and I know where he lives, so he and I will be chatting. But RVX, you remember there was we had a little market data hiccup, and we thought the volatility was a lot higher than what was being stated, and it sounds to me like last week it actually traded that low, which was a mistake. So vol is actually come in quite a bit. We've been hovering around 30 volatility in small cap land in the Russell 2000 volatility for quite some time. But it just seems that economic numbers continue to be good. The COVID numbers continue to get healthier and better. More, there's different areas different sectors within the small caps which continue to perform. So there's a reason why vol has come in quite a bit in small caps, but it does trade to a premium to large caps, as we know. But really interesting to see the month of May in terms of performance. Pretty mixed between the small cap and large caps. So it's just really interesting to see. We have a blog out that Philip Lawler, our market research leader, put out just this week on the performance of Russell 1 large caps and the Russell 2 versus international markets, along with an analysis on how value has continued to perform as well. So lots of information there. I'll bring it up again at the end of the show. Really interesting to see. I'm really looking forward to hearing Todd's outlook on options trading in the Russell 2000 as well. So I hope I'm not putting him on the spot there, but would love to hear Todd chat about options activity.
Uh-oh, you're on the spot now, Todd. So what's been lighting up your tape? What are your customers and clients coming to you for over there at Ambrosino in the world of equities and indeed volatility, sir?
Well, when you look at equities, first thing you had to do, take a step back. We had that crazy month of May, right? And we saw the equity indices kind of going up, and vol remains just, almost 100% directional. When you see a downtrade or the fear of a downtrade in equities, you start to see those volatility indexes heat up. Likewise, Mark, as you mentioned, some of the frothiness we're seeing in the vols today is likewise coming. We have that big jobs number tomorrow. And last month we had a huge miss. And of course, if you get one miss, I think the markets can overlook it. But if you get two big misses in a row, markets are going to start to maybe gain a little bit of concern. That could cause volatility. That could cause a decline in equities, and that would certainly bid volatility. So I think very much the volatility bid that we've seen this morning or this last couple of days is very much in line with expectations, given the fact that the VIX index, while it's still has had a few moments of upticks, remains in the cellar. We're back down to those near pre-COVID levels. The market trend continues to be up, despite the fact that we had some hiccups in May. And I think at this point, vol buyers could be looking for opportunity. How long will vol stay up if we do see a decline? That's the big question. So looking at some of those upper end calls, whether it be in the Russell or whether it be in the VIX, could be very attractive here at these levels, I think.
Yeah, that infamous jobs number last time where they missed it by just an amazing margin, and the markets rallied very hard off that news. So it was one of those bit of a head-scratching days. End of the day, more buyers than sellers out there. We'll see if we have a similar repeat, or maybe if Todd's right, if we have a second miss, if that will actually jar the markets a little bit to the dark side. Let's see what's jarring things out there in small caps land right now. We've been saying for a while, a lot of you have been asking us, what's up with these small delta calls? What's going on with these out here in Russell 2000? Coming into showtime this week, Russell 2000 is up about 0.5%, about 11 handles, trading right around 2280 a little bit shy of that strike. In terms of where we are from an overall action perspective, it seems like most of the action is going out tomorrow. Once again, the weeklies love themselves a little bit of a near-dated contract out here. It looks like it's actually upside, 2,300 calls. So these would technically qualify as small delta because they only have a day to go, and they are a wee bit out of the money. I'm not sure if that's exactly what the folks meant when they were asking about that. Let's look a little bit farther out. Let's see. Out to July, 2,460 calls have been trading out there. That would probably qualify as your small delta calls out there. 2,300s trading as well in June. So there are a lot of calls trading, even though this week it was kind of a quiet week net overall in Russell 2000 land. So there still are some calls lighting it up. Let's look really quickly. The vol out here, we said RVX is at about 25.5, and that front contract going out in a day is pretty much right at that level, at about 25.5, up substantially. As Sean pointed out, we were starting to threaten that VIX level for a while there in RVX, starting to threatened to break the 20 handle. Got down to 22 and change before rebounding here this week. Skew-wise out here with that contract, it's hard to analyze a contract that's going out in a day. Let's go a little bit farther out. Let's go out to June, and that has about 14, almost 15 days to go. The puts out there, last week they were a little bit stronger than this week. Last week they were about 16% rich to the at-the-money. This week, 12.5%. So puts coming in a little bit. Calls, 11.1% cheap. This week, 10.1% cheap. So calls getting a little bit of a bid. Puts getting a little bit of that bid pared down. Mr. Sean, I know you have a little bit more to add. What's lighting up your tape out there in small cap land these days, sir?
I was just going to comment on volumes and open interest just being so strong at both of our partner exchanges, Cboe Global and CME Group. The Russell complex at Cboe has seen some really good, strong volume and open interest numbers. As you know, Mini RUT launched not too long ago, and there's a lead market maker providing liquidity, but that lead market maker is backed up by another 5, I think actually 6 other market makers. So there's really good tight bid ask in the options markets at Cboe Global. And I really strongly recommend people go to cboeglobal.com, and take a look at those numbers, and happy to point you in the right direction there. CME, on the other hand, their main numbers came out a couple of days ago. And I'm sure you're going to go over this on probably the next show. So I hope I'm not stealing your thunder, Mark, but volume's up across the board, across asset classes there. Came out a couple of days ago. I think it came out yesterday, actually. So, but equities up 7% from last year. I'm talking about the month of May. But just great numbers, great liquidity. CME's futures contract in Russell trades well over 200,000 contracts a day. That's huge. So, customers continue to have just a fantastic experience getting in and out of the market, being able to equitize, being able to invest and trade the markets. So it's just really exciting to see these fantastic numbers coming out of CME yesterday. And I just wanted to add those comments. Thanks, Mark.
Speaking of volume numbers out there in the equities, let's take a real quick detour out to S&P land as well. Don't get a chance to talk about the E-mini S&P too much, even though I know a lot of you out there like to sling it. Looking pretty active again this week, even though it's a truncated week, only a million plus contracts on the tape already. Once again, just like Russell 2000, all the equities share this kind of common denominator. Everyone loves to play very close to the fire in terms of expiration of that million contracts. 33.5% going up in the contract that has 1 day to go on the weeklies. So once again, and it's the 41.5 puts. We're at about a 41.91.5 out there in the E-mini S&P. So 41.5 puts dominating the tape with 16,000 contracts. That was the big dog. Of course, we can't parse anything that has a day to go. Let's go out a little bit farther. You got to go pretty far out. There's a lot of weeklies in the E-mini, listeners. Let's go out to the June again. That has about almost 15 days to go. If you're wondering, the vol out there, 13.25 is up about a point and a quarter. But again, that shows how anemic the vol got out there in the S&P. We're talking about VIX in roughly a 17 handle, and yet the E-mini at the money vol here at about 13.25, and that's up. So this vol getting pretty low out there across the board in some of these broad equities. In terms of skew last week, People really had to have these puts. 20.2% rich to the at the money. So you're already talking about a low vol level. So it isn't that high when you add on that premium. That's still a pretty steep premium for the puts. And this week it got even steeper. 26.8% rich for the puts. So folks, as we're flirting with this 4,200 level in the S&P, getting perhaps understandably a little bit nervous, bidding up those puts. Calls last week, 13.2% cheap. This week, 14.1%. So calls getting a little bit cheaper out there. So that's a little quick rundown. Again, there's a million contracts on the tape out here. We could spend days parsing it all, but very similar to the Russell 2000 in terms of near-term contracts going out in a day. Both of them on, well, it was a little bit on the call side in Russell 2000 and close near puts here in the E-mini S&P 500. All right, Todd, there's a lot of products lighting up our movers and shakers list. Where else should we go on our journey? Or perhaps there's a product outside of our top five that you want to break down. So what else is on your radar this week?
Well, one of the big market movers today specifically, which looked to have maybe broken out and maybe was going to hold its own when you talk about the power of the cryptocurrencies and the silver markets, gold. What happened to gold? Gold was holding at 1,900 after, I don't know, it had struggled to get there, fighting higher yields, fighting the cryptocurrencies, and then gave it all back today. It seems the market's obviously looking ahead to possible Fed activity next week at the FOMC. Maybe there's something they're reading in the tea leaves when it comes to tomorrow's unemployment report, but certainly a big move today in gold.
A big move indeed. So let's break it down. Let's head on out to the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, let's do it. Let's head on out to the metals. Go to that cmegroup.com/TWIFO or /TWIO. Head that drop down over to metals, pull it on to precious, and then on to gold. And you could follow along with us coming into Showtime, as Todd mentioned. An interesting move out there in gold. I like how you put that, Todd. Gold is fighting the cryptocurrencies. That certainly is true. I mean, how long have we been saying, ever since really Bitcoin exploded onto the mainstream focus back in 2017. Obviously, it was around before then, but when everyone really started getting fixated on Bitcoin, it was back in 2017. And ever since then, we've been hearing this discussion. Is Bitcoin the digital gold? Is it the digital gold? You look at some of these correlation numbers, and from a correlation perspective, the answer is no. But certainly, it's hard to argue that people aren't swapping assets from one of these to the other, depending on their outlook on inflation and a lot of other things out there. So gold having a bit of a rough week this week, off 31 points, or about 1.6% at about 1874 and about a half coming into Showtime. How much paper is going up out there in gold this week? About 121,000 contracts. That's not bad for a truncated week out here. And exactly 30% of that 121,000 contracts is going up in the July contract this week. It has about 21 days to go. So we're going to head out there, listeners. If you're wondering vol-wise, kind of anemic out here in gold land out here, about 13 and a quarter. That vol is pretty much unched from what it was this time last week. Skew-wise, pretty much unched as well. The puts were 1.9% rich last week. This week, actually, I take that back. They're flipped to 1.9% cheap this week. So last week we were bid 1.9%. This week we're offered 1.9% out there. That makes a little bit more sense given what we're seeing out here. The calls 1.1% rich last week. This week, 5.3% rich. The call's getting a little bit more of a bid. Maybe some of those gold bugs coming back in thinking, this sell-off could be a little bit overdone. Let's see what they're piling into this week. I said there's about 121,000 contracts on the tape. The number one trade out here, though, was not in July. It looks like it was in the August contract. That was 1,900 calls. Yeah, 1,900 calls going up nearly 5,000 times in August. So that's an interesting strike. And again, only about 25 handles away from where we are right now. That was pretty active on Tuesday, 2,500 going up then, and about 2,000, almost 2,100 going up today as well. Similar numbers for both of these on the 1870 strike as well. So perhaps a little bit of an 1870, 1,900 vertical going up here in gold. We know people like their upside verticals in gold. They usually like them a little bit more extreme than that. Let's see, 1,900 calls, then 1,910 calls were the order of the day here in July, doing about 3,800 contracts this week. The most active day today, about 1,900, yesterday about 17, almost 1,800. Not too much going up on Monday. A decent clip of that opening. So opening on the 1910s and some back and forth trading on the 1900s. Let's go out a little bit farther because we do like to find our weird aberrant paper. If that's not optimistic enough for your blood, listeners, there's always something to be found on the far off upside in gold. And that appears to be the case again today. Looks like we got the 2,500 1x2 going up in June of next year, 2022, going up 250 by 500 times yesterday. Then it looks like that same vertical going up on a different ratio today. 2,000 calls trading about 1,300 and the 2,500s trading about 1,800. So a total of about 2,300 on the 2,500s and about 1,500 on the 2,000. So not quite a 1x2, more by like 1 and by 1.5 on that. So if that is the same player, they're playing with the ratio a little bit. But again, that is kind of what people like to see. Like to see the 1x2s. Usually we see the flies, so we don't see the naked short units. But this one appears to be straight up 1x2. That might merit a little bit more analysis out here. Todd, do you notice these weird upside flies and trades going up in gold all the time too? And anything else lighting up your tape out there in gold options or indeed in the metals this week, sir?
We do. Unfortunately, we don't see them every day. Obviously, we talk about those black swan events, or like you mentioned in oil, looking at the par calls, they're way out there, the what if type of strikes. One that caught my eye, unfortunately, hasn't traded recently. But last year, we were eyeballing the December 2,500 calls. There was good activity going back about a year ago, as well as the 3,000 calls. Now, this was when the Fed had just gotten the rate down to zero, and we didn't know where this pandemic was going to take us. And it seemed like gold, that was one of the areas where you were seeing some of this insurance investing, whether it be obviously a lot more time than some of the options we're talking about today, but a clear sign that upside gold calls are a place to park some insurance in the event of. To say today that gold's going to be at $3,000 an ounce by the end of the year seems like a long shot. But again, the market has done much stranger things than see gold make a huge move in a short amount of time.
That is the case out here. Since we're talking metals really quickly, let's flip it out to another product we don't get a chance to talk about a lot. Let's go out to the base metals there, listeners, and you'll see copper out there. Again, it hasn't really been the most active options story. We used to talk about it on the show every now and then. It would do a few thousand contracts. That was about it. That narrative has changed a bit out there, doing a little bit more paper, about 20,000 contracts already on the tape right now in this truncated week. So it's no euro dollars. It's not even a gold, but it's still, compared to 2,000 or 3,000 it used to do, that's a much more aggressive total. I saw CME tweeting out recently they have set some new record options out there, record volumes, I should say, for copper options in terms of ADV and in terms of open interest and volume. So copper has been having a little bit of a resurgence from a volume perspective. Not so much on the product price perspective this week. It's off a little bit this week, off about 1/4 of a point or nearly 5%. Of course, it has seen some upside of late. China, of course, copper very much a proxy for Chinese demand. Where there goes Chinese demand, so goes copper. That's one of the things that's kind of held it back. But these days, a little bit more action going on out there, and that's been driving it. And copper, again, on our number 3 to the dark side this week, off 3.5% in our movers and shakers. And again, coming into showtime at about a 445, off about a little over 0.2 of a point, nearly 5%. And of that action, of that 20, almost 21,000 contracts, about half of it, 55%, coming in that July contract goes out in about 21 days. So we're going to hang our hat out there. If you're wondering, how does copper vol compare to gold? We said gold's at about a 12 or 13, so pretty anemic out there. Copper looking about 2x that, at about exactly 26. So that's up nearly 4 points, 3 3/4 points. So getting a little bit more froth, a little bit more vol out here in copper land. So if you're looking for perhaps a little bit juicier metal, maybe copper is where you should hang your hat. Skew-wise, the puts last week, 1% bid. This week, 1.4% cheap. So puts swinging a little bit out there. The calls last week, almost a full percent rich. They had the money. This week, nearly 3%, 2.8% rich. So calls catching a bid out here in July in copper. Let's see what was lighting it up. Yeah, it was calls. 4.7 calls, the 470 calls here. leading the dance out here in copper this week with about 3,300 contracts, 1,800 today, 1,500 yesterday, and a handful on Tuesday. I'm going to go out on a limb and guess a lot of that was buying, given what we're seeing out here from a skew perspective this week. So interesting stuff out here in copper. Let's look really quickly. Also see some 5 half calls trading, about 1,000 of those in August and also in September. So 5 half also getting some action out here. And that's not optimistic enough for you. You got the 6 quarters going up in Jan of next year for almost 1,000 contracts out there as well. So some interesting upside to be found. Todd, in the past, the narrative has been, copper not really that much of an options story and very much linked to Chinese demand. But that seems to be turning around a bit these days. And at least from an options volume perspective, it's becoming more intriguing. Have you been noticing an uptick in interest and or volume in copper over there at Ambrosino, sir?
I think you're absolutely right about that. When you talk about the ability for the market to kind of hone its products, options do just that. It gives you an opportunity, gives you less of that two-way risk when you're buying or selling the underlying. It gives you something, we have a risk out above this price or below this price. And that's where we start to see things kind of hone in. So it's very interesting to see copper, which, as you mentioned, is a very good indicator of economic growth, whether it be China, whether it be home builders here. There's a lot you can take away from the copper market from a macro perspective, similar to oil. And I think at this point, yes, seeing some of those call skews maybe bidding up gives you a sense that maybe there's some more upside to copper.
And speaking of upside, it certainly seems like there's some more in store for the ags. So let's head out there next.
It's time to get our hands dirty exploring the latest options trades and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, let's get out to the ags. Go out to that drop down, select ags, and you can choose where we go next. We have 2 ags dominating our top 5 this week. First, oats, number 4, up a little over 3%, and then soybean oil up 5.12%. So at least those 2 on the ags front getting a little bit of a lift out there. If you throw feeder cattle into the mix, and you're talking 11.25%. So a lot of upside in that neck of the woods here. Unfortunately, oats, about 44 contracts on the tape this week. So there's a reason why we don't talk about a lot of oats here on the show. But soybean oil, a little bit of a different beast. It's up about 5.1% since our last show and doing about almost 40,000 contracts so far in a truncated week. So it's a pretty active product, talking about double what we were just talking about out there in copper. So let's hang our hat out there in soybean oil. If you're wondering, of that 38, almost 40,000 contracts, about exactly half, almost, about 47% going up in this front July contract that has about 22 days left to go. So we're going to hang our hat out there. By the way, you're wondering, what's the vol right now in soybean oil? It's pretty rich, 37.5. That's up 6 points from this time last week. So we've said it before, the ags might be worth a second look for some of you out there who are looking for some new products to trade that have a little bit more liquidity, a little bit more vol. Could certainly do worse than some of these products out here, particularly some of the larger, more liquid ones like a corn. Again, we'll get to that. I think we have a question about that a little bit later. In terms of the skew, let's see. Last week, the puts were about 2% cheap to the at the money, to that frothy, to that rich 37.5%. This week, they're about 2.3% cheap. So staying around that same level, getting a little bit cheaper. The calls last week were 9.5% cheap. So the calls were annihilated last week. This week, they've swung in the other direction pretty demonstrably. They're about 3.6% rich. So that's a big swing in the calls. And again, we're rallying, so not hard to see why. I'm going to go out on a limb and say it's probably calls that were dominating our tape this week. And that is pretty much the case in, let's see, the actual number 1 contract is the D56 puts, though, with about 1,500 contracts. But we know most of the paper came in July. So let's go back out here. So our number 2 trade for the week, and the number 1 trade in July certainly, was the 72 half calls. 1,100 of those. Paper closing looks like a bunch of them, actually. About 1,100 again. 800 and change on Wednesday, about 300 and change on Tuesday. It looks like closing on both of those days. So perhaps we had some shorts to the upside who decided to get the heck out of Dodge and buy those back. Also saw similar paper on the 70s and 65s, all going up around 1,000 contracts each, all similar paper Tuesday and Wednesday, and mostly closing on both of those. So maybe someone had a bit of a short call strip out here in soybean oil and decided to take it all off this week. Either way, someone bidding up that call wing quite a bit out here in July soybean oil. Let's look really quickly. Any other interesting prints out here in the soybean oil? Yeah, looks like it's mostly that call strip. You do have some 65 puts trading it up this week as well. They went up about 1,000 times, almost 1,100, and that gets you about 500 on Tuesday and about 500 again on Wednesday. Nothing going up today. And again, most of that closing. So a lot of closing paper here in the July contract, even though it has 22 days to go. So interesting stuff. Folks getting the heck out of Dodge, apparently, in soybean oil. That's what you were, as Sean puts it, our friend Dan said it on the show recently, the big adios. Sounds like someone giving the big adios here to soybean oil. But you know what we'll never do? We'll never give you guys a big adios, because it is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your feedback segment, the portion where you guys take the reins, your questions, your comments, your pearls of wisdom you want to share with your fellow TWIFO listeners. And Todd and Sean, this first question here is, it's kind of what TWIFO is all about. It's the reason this show was created. This comes in from Alan L. He wants to know, I've been listening to TWIFO for a while now, and I have to say you've got me interested in futures options. Well, like I said, that's what the whole show is about, to provide you with a little bit of information, a little bit of education, so you can arm yourself if you are indeed inclined to go out there and trade these things. He goes on to write, I've been trading SPY and Apple options for a few years, but I'm thinking about diving into the futures options scene. I've applied for the account and I'm ready to go. I'm just stuck on the product. Where should a noob like me begin? Well, I think you're downplaying yourself there a little bit, Alan. You were clearly not a noob, because you've been trading options for a while, and also you listen to a show like this, so you're already ahead of the game. But maybe, Todd, we'll start with you. This is kind of the question of the day here on TWIFO. This is really the reason this show was designed, to try to help educate a lot of those retail options traders who maybe are trading your SPYs and your Apples and everything else, and explain to them, hey, there's some other stuff going on, some interesting stuff going on in the futures options hills. So, Todd, when someone comes to you at Ambrosino with a question like this, where do you typically steer them, sir?
Well, there's a vast amount of places we can look at. If you want to look at a place that maybe has a story to it, which tends to maybe help the segue move a little smoother, we can look at something like rates. And when the Federal Reserve takes rates down to zero, there's really only one way rates can go at that point, unless you believe that we're going to go negative. And that's certainly on some radars, but it's highly unlikely at this point. A lot of what we're seeing today, looking for when that first Fed rate hike is going to come into play, whether it's an announcement later on this year, whether it is something at Jackson Hole or something in the fall, maybe 2022. There are plenty of not only options strategies that we look at, but liquidity is very deep. And you'll know that if you get in and it's the right trade, you can hold on to it. If it's not, you can get out. So some of the Eurodollar option structures that we work with, there's a lot of different ways to price something for a Fed hike, maybe over the next, early 2022, mid 2022. Those are the kind of things that maybe if you want to dip your toe in, given it has a story that you can follow along.
Interesting. The rates. Mr. Sean, same question for you, sir. This is kind of the reason TWIFO exists, for folks like Alan. What do you have to say for him? What is your suggestion? Where should he begin his novice journey in futures options, sir?
Well, Alan, great question. And this is definitely the place for you to be to ask the question and to get more information. You trade SPY and Apple options, so you're in the equity space. I would just probably recommend you stay in the equity space that you're comfortable with. SPY is, the ETF on the S&P. Again, being FTSE Russell, I would say take a look at these these mini Russell options over at Cboe Global, or trade the Russell options at CME Group as well. Get to know the products, get to understand how they trade. You understand options. Buying a call, you're only risking what you're paying for. Selling options can be a little more risky, so know your risks in regards to the product. Trading spreads is always a risk-averse transaction as well. But if you have any questions at all regarding trading options on either Cboe or CME, go to their education sites on their website. They're just phenomenal. And as Mark and Todd both mentioned, talk to your broker. Ask him where would be a place for you to step in and trade options on futures. Being comfortable with equities, you're not flying too far from the nest. I would say put your toe in the water in equities. The liquidity, as Todd mentioned, in the Eurodollar complex is deep and liquid in the equity markets as well. And then you can just kind of graduate from equities from that point as you learn more about other asset classes. But always ask questions, learn about the products before you step in, so you know your risks, you know how to manage your risk, and and you have a good strategy of getting in and getting back out again. That would be my advice to Alan, but great question.
Yeah, I'm definitely with you there, Sean. He's already familiar with SPY. Stay with what you know, especially when you're first starting out here. You're not going to see that much of a difference between the EMA and the S&P, which we just broke down here on the show, doing 1 million contracts already on a truncated week. So you're doing some papers. You're not going to be hurt for liquidity. The vol is going to be similar to what you're used to. You could probably apply the same or similar strategies that you're doing. You don't say what you're doing out there in SPY. So if you're doing verticals or selling puts or whatever you're doing out there, you could do similar things with similar return profiles in the E-mini S&P 500. So I would definitely recommend you start there. Just go basic. Go basic. If you're doing covered calls, go that way. If you're doing puts to maybe get into a long position, go that way. A little bit of difference, obviously, in the futures options with owning the future versus owning the underlying. Get some tax advantages to that as well. So as Sean mentioned, if you're not familiar with all that, you're listening to the show for a while, so hopefully you are. But if you're not, great educational material over there at CME to help you handle that transition. But definitely, I'd say start in equities land. Then as Sean mentioned, as you get a little bit more versed, a little bit more seasoned, we profile a lot of products here that are attractive to people who have a background in equities. We're just talking about WTI. It's very active. It's got a lot of mind share right now. There's a lot of paper, a lot of liquidity, and the skew setup is very similar to what you're used to in the S&P 500, at least right now. So that's something that wouldn't be that aberrant for you if you do want to take a foray out there in the commodities space. And then down the road, people have had success migrating from the S&P 500 into products like corn and the ags. It's got a lot of liquidity across a lot of months, and it does a lot of paper. It's very liquid. So you could do worse than migrating into some of these big things. I'd stay away from the more nuanced and niche stuff. Stay away from, the dairy and everything else for a while. But if you do eventually, once you get your feet under you in the S&P 500, you want to branch out a little bit. Those are two decent starting places, I think, where you could go. And there's a lot of liquidity, and you won't feel that uncomfortable out there in those products. All right, let's wrap it up with this one really quickly. This comes from Meltz. Meltz wants to know, what's up with ETH options at CME? Well, the answer is nothing right now. There are no ETH options. ETH futures, however, different story. Those are actually doing some papers. You've been paying attention, probably listeners. ETH and crypto in general have been moving around like crazy. They got shellacked over the course of the last couple of weeks, have been rebounding a little bit ever since then. And the ETH futures at CME have been doing decent paper. I'm looking at the numbers right now. On the 13th of May, they did nearly 12,000 contracts. They did that again on the 19th. So a couple of days of around 12,000 contracts. Looks like they've been averaging around 5,000 to 6,000 every day. So for a new product launch, again, that's a little bit smaller contract out there than what you're seeing on the Bitcoin front, but still, for a new product launch, that's respectable. So given those numbers there, Meltz, and everyone else who wants to know, I don't think we're as far off from an ETH option as we were when we launched Bitcoin futures and had to wait about 3 years for those to launch. So I think we'll get them a lot sooner than 3 years. This year, I don't know. But it's a good sign that the ETH futures are doing good paper, because that means someday in the near future we may get an ETH option. All right, everybody. Unfortunately, that music means we've come to the end of another epic journey through the world of all things futures options. Todd, you did an able job holding down the CME hot seat. So if folks are intrigued, they have more questions like our listeners do today, maybe just want to reach out to you over there at Ambrosino. Where should they go? What should they do, sir?
Well, thank you for having me on, Mark. You can reach me on Bloomberg at tcolvin14 at bloomberg.net. You can also reach me on Twitter at TJC1539.
There you go. Hit the man up. Let him know what you're thinking. Maybe you have questions about these different products. You know where to go. You also know where to go to learn all about all things recon and all things FTSE Russell. Mr. Sean, if they somehow forgot, refresh their memory, sir.
You can reach me at sean.smith@lseg.com. Go to the FTSERussell.com website and check out all the analysis, all the information about our global indexes. You know, we've got close to $16 trillion benchmarked to our products globally. It's just tremendous benchmarks, tremendous amount of information that we share across the board for individual investors to sophisticated institutional clients as well. So there's a tremendous depth of information on our website. And just yesterday, I think I mentioned earlier in the show that our Philip Lawler put out another blog on performance of large and small caps, our Russell 1 versus our Russell 2. That versus global investments. So there's a really good blog that went out, and Mark, I'm going to send it to you so that you can blast it out as well. But if you go to FTSERussell.com/blogs, you'll see Philip Lawler's recent blog on small cap performance. It put out yesterday, and it's called U.S. Stocks Meander in May, but Small Cap Value Bias Persists. So there's a fantastic article there. Take a look at it, and if you have any questions, I just gave you my email address. Mark, thanks for having me on the show. Todd, it was a pleasure to be on the show with you today. Your information is absolutely fantastic today, so I just wanted to say thank you for that, and it was really nice to meet you here on the show.
Thank you, Sean. You as well.
All right. And you know where to go to learn more. First off, to get these reports, it's just cmegroup.com/TWIFO or /TWI. While you're there, check out all, of course, the great research from Blue and Eric and the whole research team over there. A lot of great education. So you have questions like Alan, everybody else, great education center there as well. You can spend hours. Beware when you head on over there, but you can begin your journey, cmegroup.com/TWIFO. On behalf of the folks over there at CME and Sean, everybody in FTSE Russell land, and Todd, and indeed myself, I thank all of you out there for downloading, streaming, and subscribing. And, of course, for listening live, sending in those questions. We love you all. Back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. And we're back after that for the newest addition to the network, going pro again with your first taste of the return of the fan favorite options oddities. Looking forward to that. So we'll see you back here for all that fun tomorrow. Then it kicks off again next week on Monday with the option block, all the way through to another Thursday and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index, Russell 2000 Futures and Options options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.